Okay, welcome everybody. My name is Michael Camo. I'm director of content for T3 Live. We're here with Scott Redler. Scott is about to go on Fox Business in just a few minutes, and so guys, so Scott has two ties on. So Scott, what colors are those ties? It looks like you have a pink one, and what's the other one?
This one is blue. I feel like the pink one I like to do. It's good luck because I always race in pink. My mom is a breast cancer survivor. I know so many people, so I feel like every now and then I like to do the pink tie. But I might do this jacket. So I don't know if I could do the pink and the pink. It's like too much pink. This was a jacket that one of my subscribers got me, Joey B. When I said two things could happen in January. One, Nvidia could clear 505, and if it does so, and we do well, I'll wear the jacket that he bought me. Or Apple gets to what was that round number? Hold on, where's Apple right now? Apple didn't do it, obviously. So, because we always make fun of Dan, you know who, because he wears all the pink and blue and green, and I'm a little bit bullish usually too. So he got me this jacket. So I said I gave some parameters on why I would wear it, but might be too much pink. I might have to go the blue with this. The blue actually would be nice. The blue in this. What do you think?
Okay, guys, let us know in the comments. Should Scott go all pink today on Fox
No.
Business? What
I think
what should Scott wear? We need some opinions out from the audience here.
Let's see. Do you have a?
Yeah, we have Cobblestones here. Christina says wear the jacket. Guys, let us know if Scott should wear the jacket in the chat. So Tony is voting for all pink. I'm voting for all pink. Black Bear wants blue. So far, the crowd wants pink. Pretty much.
Pink and pink is too much pink. It like clashes. The blue has a little bit of blue in it. I got it. It's live TV. I'm going on Fox Business at 3:03, so that's why today's going to be a little shortened segment. So we got to probably have to get cooking here.
Yeah. So Scott, I guess everybody wants you to look like you're in the NBA draft with pink on pink. So okay, so let's get down.
Pink sneakers.
Yeah, so we are going to get down to business. So Scott, obviously the big news this week was the Nvidia earnings report. So what did you think?
What did I think? Well, I went into it's actually pretty cool. I went into the report. I wasn't sure, like this week, the sentiment was really, really negative. Just as far as the week, everyone's like, oh, second half of February is a down week. You then had a hot PPI, a hot CPI, and basically people were getting a little bit bearish. And then would Nvidia save the day? And I didn't know. So I said, what I'm going to do? I'm going to do a straddle. So I'll buy a call spread and a put spread, and then I just need a bigger move. And when I first saw the news, I was like, damn it. It looks like the option guys are going to win, and I'm going to lose on my call spread. I'm going to lose on my put spread. And P.S., the stock took off. And yesterday I actually was talking. I said, 742 to 747. Okay, that was the level. And I was, it was just like, if that holds, I'm going to buy the stock. And then, it held, and I bought the stock. I had a really good day yesterday. Today, right now, Nvidia is, it's kind of had a nice push, and now it's putting a bit of a doji in for a rest. So I was able to make really good money. So I was very happy. I lost a little bit of my hedges like everybody else because I wasn't sure exactly if the market was going to take off or not. So I had a straddle. I had a bunch of options on. I also sold some premium in the spiders, and I've been trying to roll them up and work my way out of them. But all in all, did really well with Nvidia because I was flexible. Flexible is key in this market. You can't be stubborn, and you can't just try and really fight a move because that move could knock your teeth out.
Okay, Scott, it looks like the bears did not disappear because they were saying that the leaders aren't going up enough now, but everybody's still on this kick about the market being too concentrated. Small caps haven't participated enough. Are you paying any attention to those arguments?
No, it adds no value. It adds no value whatsoever. I'll tell you right now, if you're a long-term investor and you put money every single month in a 401k, you don't care what's driving the S&P cash. You don't care what's driving the indices. You just want the indices to go up 7% over time, historically the average. If you trade for a living like we do, okay, and you need to find the names that are moving, you need to play the small caps when the small caps are in play. You need to play the bios when the bios are in play. You need to play Apple when Apple led the market 6 months ago and it didn't do it anymore. You need to play Tesla when Tesla led the market a year ago and now it's been out of play. And now you need to be playing the semis and figure out when does that change. So as a market participant that gets paid monthly and quarterly, you got to figure out where the action is and go with it. And if you're an investor, you don't care. You just want the indices over time to get you 7% over 30 years and you could build wealth.
Yeah, I think people should remember one of Scott's favorite sayings, which is you should be looking for setups, not trying to predict tops and recessions and the end of the world. So Scott, what do you see for Nvidia going forward?
All right, let me show the chart real quick. Hold on, because
Okay.
let's see, share screen. I could do this. I'm getting good at it. I do it in the 630 Club now. Entire screen. Boom, boom, boom. Share. There it is. You see it? All right. So first of all, the reason why I said 742 to 747, that was the prior high. What do? We gapped above it. Yesterday, if you're a trader, you know exactly what I'm talking about. They pulled Nvidia in right to that spot, and then they took it off at like 933. Then today, you had nice follow through. We hit 823. I was sweating a little bit. I had to go home and put deodorant on because I was short some 810 calls on top of my 750 by 795 call spread that I did tweet out prior to it, and I was on the stock. So all in all, what's that? That was 8 something or other I just said. It was nice that we opened up so you could have sold your overnight if you had it, which you should have because it went out on the dead highs right here. And then if you happen to have been short premium, I was short the 810s from yesterday. I didn't think, my holy cow, they gave you a way to add to that and trade out of that. And now that you have a doji right here, doji style. You ever do a doji style, Michael? It's a t-shirt, from Trading Land. I used to go to Vegas and it's a little dirty and teach at these things, and people would walk around with these t-shirts. I like it doji style. Meanwhile, doji is the candle of indecision where you have middle range, a high and a low, and now we probably need to hang out in here a little bit. So it'll be a little bit of range bound, probably where you can't add on highs or on lows, and it's going to need some time to build. And I would think at some point, it will be taking out this high here, which was 823, and I kind of think that it's going to have to let the moving averages catch up a little bit. Now you have today's low of 775, and I have to give props to Kelly in our chat room because there was an anchored VWAP from yesterday right at 775, and he called it to the T, and it gave you a great two-way trade. So I would say it needs a little bit of time, but ultimately this big pro earnings gap paid you if you took a straddle without picking a direction. But then once the print happened and you were prepared and we took out 746, you had a move of 70 points where you could have made a lot of money as an active trader, and we did pretty well with it.
Okay, Scott. So you've been talking also a lot about Amazon lately because Jeff Bezos has been look at Scott just pull the charts off the screen. I am going to start calling Scott. I am going to start calling Scott for IT help. I feel like I'm in the Twilight Zone right now. Okay, so Scott, let's go to Amazon because you've been talking about, Jeff Bezos. I think he needs to buy a new super yacht or a new country. So he needed to raise a few $1 billion. So what's going on with Amazon?
So if you remember, about I don't even know if it was a year ago or 2 years ago when Amazon was trading between like 3,000 and 4,000, and it was thin, and the option traders owned it. I'm like, split the damn stock. During the pandemic, they came out a bunch of times, had record quarters, but every time he was a really good quarter, all of a sudden within one day on the gap up, it was being sold, and it was because him and McKenzie owned 19% of the damn float. So I was like, split the damn stock, so when they have good news, there's more volume, it's cheaper, and blah, 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 they can eat their way through it. So Amazon is one of the few mega cap names that has not made an all-time high. I think it's positioning itself very well. And and Jeff just sold 50 million shares. I don't even know what billion that is. So if I go back to the chart, let me give you a few reasons why I feel like it's in a good shape. It's in good shape. Well, first of all, you have this pro earnings gap, and when you don't fill this pro earnings gap, you usually move in that direction. So that's whether they sold it or not. Okay, that was a good strategy. And then basically he came out, and during this 5-day sequence, he sold 50 million shares. So that means some funds had to be absorbing his shares, not because they want to buy it from him now so he can put, buy a planet or go into space or give to charity, because they think it's going to go higher. So anyway, you know, Berkshire is having their weekend event, and I know within the last year, the younger PMs have started buying Amazon, and I have a feeling they're accumulating it. They're not selling it. Like right now, I think they're selling a little bit of their Apple stake that they did really well with, but they're accumulating Amazon. So PS, I think I think it's calculated. If you're really active, you can be long versus this gap from yesterday. If you're not as active and you're an investor, you can be long from here. I think if you're an active trader, you could go to the weekly chart. The weekly chart looks really nice, where it just kind of held it here. It's going sideways. It's been going above the 8-day. Although it had a big move, it hasn't made a new all-time high like a Meta or a Microsoft or even an Apple prior. So I think there's room back towards this double top of 187. So you have a void here that can make you money. Then once it clears that, then I feel like this is a whole new channel here where you're going to see 200 plus at some point this year. Obviously, as long as the market doesn't fall apart, which at this point it doesn't feel like it's falling apart. So I bought options for next week because it feels like it's tight. And if we hang in there, you look at this daily chart, if we can get above and stay above, this 175-ish. Well, today we hit 175.75, which would have been nice if it held that, but it didn't. This area, I think it's a good option play if you don't want to be if you don't want to be long too much stock, and it could work well. And if you long it as an equity position, midterm, long term, I do think that they're doing so many different things that it'll work for you long term as well. So on a lot of different levels, it works, and who knows, maybe we get a catalyst from this weekend. And at this point, technically, it's in the game pretty well.
Okay. So Scott, let's pivot to China because you've been talking this year about accumulating KWEB. KWEB is up about 6.5% over the last month. And China is something, I feel like it's something you talk about like every couple of years. You come back to either FXI or KWEB or something in China. So why now for China when everybody hates China? What do you see there?
Well, it's underperformed for 5 years. And you could do it two different ways. As an asset allocator, I feel like if you have a pie chart and you could talk to your money manager or even your human resources department, you're allowed to allocate certain ways to certain regions. It was funny that the Nikkei, right? Everyone left that for dead. That led the U.S. We lead China. It finally made a new all-time high from 1989. So it went first, and then it took a long time to get back towards those highs. I don't think it's going to take that long for the Shanghai to get back to Shanghai 5,000 or the Hang Seng. But over time, it does happen. And China's going through their 2007, 2008 real estate crisis, financial crisis. I think they're towards the tail end. So I think as an investor, if you put flows into there every month for alpha, it's going to work. I haven't said this that many times, but every now and then when I do say it, it usually works. So as a longer term investment, I feel like you can get alpha. As a shorter term trade, I was buying the KWEBs. If you go back to, if you want to do it, Michael, you can. The chart, you had a bit of a move lower. It put it. I actually bought into into weakness. Let's see, where are you? Let's go to. There it is. So at this point, would I be, as an active trader, would I just be buying the KWEB the second? No, I was buying it during this, and I trimmed some, and I was buying it during this. And now it feels like it's got room to the 200-day. If you go look at the weekly chart, you'll see why. I think longer term, the KWEB was 104, was 82, was 67, was 36. Look at this consolidation for a long period of time. At some point, China's going to get it right. They have a lot of people over there. They have big business over there. They're just going through their excess. Same way we went through our excess in NASDAQ 5,000 bubble bursting and the financial crisis. They're going through their excess now. So I do think at some point, this will be a really nice move. So if you don't trade for a living, you could do it over monthly, and make money. If you trade for a living, you make sure you go out, give it enough time with the options, and so far those options got paid.
Okay, Scott, let's shift over to another couple, I guess, of sort of I would say controversial assets at least. So I saw on the VTF today that you added Nugget calls. So Nugget is one of the leveraged gold miners ETF for everybody out there. So again, like why gold? Why now?
Why gold? Why now? Gold has different definitions and different narratives based on, what's happening in the world. So if you look here at the GLD first, the GLD itself, which I've made some money, but I've also lost some money trying to time this thing. It has still finally look at that. The GLD is above the moving averages. The GLD looks better. Like if you're a gold guy, you've been accumulating coins and you're dancing around, you're a gold bug. I get it. You've made a lot of money accumulating over. I know a lot of guys that have been doing it. Obviously, lately, Bitcoin's been much better to do it than gold, but it's fine. Everyone has different asset classes for their age. If you're a boomer, you probably love it. If you're 20 something, you're like, what are you doing there? You should be in Bitcoin. Or you can do a little bit of both. Anyway, so the GLD just got better. You look at the weekly chart of the GLD and it still looks good. I probably should be buying some GLD calls also, to be honest. 194, 193, 193 just poked up, so you have a little bit of a void here. So that can go. And then you look at the monthly chart. There's a beautiful cup and handle pattern where actually, wow, you look at this, still held this upper area. And here's your cup, here's your channel handle. So gold still looks good. It's taking its time, just like an older boomer. We take our time. I'm not a boomer. Am I a boomer? Am I a boomer, Michael? I'm
No,
51.
no,
Boomer's
no,
like 80, 75. I'm
no,
Generation
yeah, we are
X.
Scott. We are the children of boomers.
Yes, we're Generation X, I think. Are we Generation X?
Yeah, we're somewhere. I think
I'm older than you, obviously.
Yeah, yeah. We're both sort of in that area.
So anyway, this chart really looks good. So someone pointed out to me on the site that that Nugget made a higher low, and just because I've lost a little bit in GLD, I'm like, yeah, let me do something a little different. So this is the GLD. It was just as high as 37. Looked like it kind of put a low in, then a bit of a higher low. So I'm like, let me go out a month, buy some options here. Last time it looked like it was going to break out. It went to 37. So I don't remember exactly what I did, but I think I bought like $26 calls just in case it wants to come back up into here to be involved. I'm not buying Nugget, to trade, or I'm buying options so I don't have to watch it. That if gold breaks out, Nugget's going to go. I think there's another thing that everyone talks about. GDX obviously is not as not as leveraged, which you could go with that if you're if you're a little slower. It's okay. I'm slow at times too. But it did do a little red dog reversal here, and you have a higher low. So I think there is a chance every month there's a new flavor, there's a new things going on that the GLD, you're at the bottom when nobody's really thinking about it. You have a low, a higher low, lots of moving averages above. It's a concept right now, for now. So when it's a concept, you get in early, you make money early, and then when the trade turns on, you add to it. And right now, it's just a concept.
Okay, so speaking of like things that are just concepts, what about natural gas, Scott? UNG. We haven't talked about UNG in ages. It was the worst ETF last year. It's the worst ETF again this year.
I don't even want to talk about it. I don't trade it. I don't care.
Okay,
No.
we don't want to. Okay,
We don't have time. I'm going to be on Fox Business at 3:03. It's 2:50. We have 3 minutes left, and then I got to pick what time I'm going to do. Put my jacket on and get ready. You can watch me on Fox Business with my girl Liz Clayman.
Okay, guys, let us know in the audience. Again, should Scott wear blue or should he wear pink? Okay, Scott, so you've been active in the banks, and it looks like you were just trimming Goldman Sachs today. You're getting into Morgan Stanley. What are you seeing with the banks?
The banks had a big run. That it hasn't been a great trade. It's been just more like a trend. And here's Goldman Sachs. I saw the breakout failure here, and I know that if I would have bought that, I've been really upset. Then I sort of rebuild a little bit. I'm like, you know what? Instead of buying GLD, the stock, if I go out and buy the options, I do a call spread, which I did for this Friday, which would have been maxed out. I didn't trade it great. Next time I'll do it better. And then I bought the 400s. I'm like, it's still sloppy as hell. Like, look at these topping tails. That's not fun at all. But I do feel like there's action there. And then someone's like, today, what about Morgan? Morgan's really tight. I feel like if the stock market holds up, there's a lot more deals happening, IPOs happening, etc. So it's like I figured, hey, I'm not going to trade Morgan either because it's sloppy, but I can go out a few weeks and buy like the 88 calls. And if Morgan Stanley wants to play some catch up to JP Morgan, which is best in breed, I'll buy some options. So it's pretty tight here. Sometimes when things are like look good chart wise, I'm just in the what's it called, the options, and then if it really triggers, I'll be in both. But for now, it's a concept. It's kind of like percolating where you could be in tier 1, and then if it really goes and starts acting well, you get in tier 2. But for now, Morgan is a laggard. I will say it's a laggard. JP Morgan's the leader. Goldman looks okay. Morgan's the laggard. But the more a group extends, it filters down the food chain. And right now, we'll see if Morgan's one of those.
Okay, Scott, it is 2:52. Do we have to let you go for Fox?
Yeah, please.
Okay, all right. Everybody say goodbye to Scott. Let's give Scott a thank you. But stick around for 1 second, everybody. Scott, thank you very much. Good luck on Fox. Everybody, tune into Fox.
Here's Fox right now, calling in. You guys want to hear? Let's see what they say. Hello. Hello.
So the biggest win in the market today is Carvana. The stock.
Yeah, I got you. How you doing?
Dozens and dozens of articles
today. You're fine with this FaceTime, or you want us to do
the what?
About the market.
Are you fine with this FaceTime, or do you want us to send you the link?
I'll do whatever you guys say. I could do FaceTime. I could put us in a spot where it's 2:53. I can get a good spot. I'm gonna put my tie and my jacket on.
Look at this. They were still looking.
It's your audio presenting.
Can you hear me now?
Stripping all over itself.
Yeah, I got you now.
Okay.
Price.
Do you need to get ready and stuff?
Yeah. I need like 5 minutes. Is that cool? You can call right back.
Stock. But the stock of the year and stock of the decade.
Hello?
Maybe the next Nvidia. This was once held as the company of the year.
All right. I'm gonna put my tie on and my jacket on, and then call back in 3 minutes. Okay.
3 minutes.
3 minutes. Good.
Just leave the phone connected, and just go get. Okay.
All right. Done. I'll just leave it connected, and then I'll get a good spot.
Yeah, just have your phone sideways.
Oh, sideways.
I don't know that, man.
Oh, yeah. Okay. 3 minutes. What do you want? You want the pink tie or the blue tie?
Stocks are the only way to go with
All right.
the stock market.
They say blue.
Blue? Okay. And then I'm gonna get a great jacket.
Okay, guys. So if you go to t3live.com/show, t3live.com/show, the link is also in the description. If you're watching on Facebook, YouTube, LinkedIn, the link is down in the description. If you're watching this on Twitter, the link is right in the tweet. t3live.com/show, t3live.com/show, and you can get Scott's newsletter for free on Monday morning. You will get 3+ trading insights straight to your inbox. So again, t3live.com/show. Thank you for joining us. Hopefully you enjoyed this, and tune into Fox Business to see Scott at 3:03 p.m. Eastern time. That's 8 minutes from now. Tune into Fox Business now to watch Scott, and guys, have a wonderful weekend.